Vehicles with green registration plates are increasingly making their presence felt in the traffic even without a sound and smoke-emitting silencer. The sale of electric two-wheelers was at an all-time high in October. Over 75,294 electric two-wheelers rolled out of showrooms and hit the Indian roads last month. Electric two-wheeler sales for the September quarter grew by 16% over previous quarter at 162,215 units. The year-on-year growth was a massive 225% compared with the same quarter last year. A McKinsey study projected the demand for electric two-wheelers in India to reach around 8.2 to 9.2 million units by FY30. And after the initial frenzy, the electric two-wheeler market is staring at a consolidation. There are over 80 registered companies in this space. But according to an analysis of Vahan data by Business Standard, just 7 companies accounted for 86% of registrations of electric two-wheelers in September. E-scooters dominate this space. In June 2, the share of top 7 companies in total registrations was 81%. These 7 companies were traditional internal combustion engine two-wheeler players Bajaj Auto and TVS, and electric two-wheeler makers Ola Electric, Hero Electric, Ather Energy, Okinawa and Ampere. These companies are the only ones who recorded 1,000 registrations or more in September. About half of the total registered two-wheeler makers were not able to reach double-digit registrations. According to analysts, these trends will lead to further consolidation in the industry. Not only the new electric entrants, traditional ICE two-wheeler companies like TVS and Bajaj Auto are also making their presence felt in the electric two-wheeler market. In October, TVS Motors sold 8,103 units of TVS iQube Electric as against a meager 395 units a year ago. In September, Bajaj Auto and TVS Motor registered 6,488 electric two-wheelers, accounting for over 12% of the total registrations. Traditional ICE companies have the advantage of a strong dealer and distribution network and can give new EV players a run for their money. Let us hear more from Suhinder Gill.
Yeah, surely, when it becomes a large business, it cannot be it's an automotive business. It's not only a product that you're selling. An automotive business cannot be a small timers business. So you would see that people who have been not doing national sort of a play and who are not into a complete spectrum of electric two-wheelers, they will have to either work it out again, or they will have to think about some collaborations, joining hands with somebody else, getting them consolidated. So in the end, in maybe 2 to 3 years' time, ultimately there will be only less than 10 players who will be leading the pack. It's a very healthy sign because there is enough room for others to act as either suppliers or technology providers like startups. They can do a wonderful job if they have limited resources to be a part or links of a chain of an EV mobility which is going to really overcome everything else in India as far as two-wheeler mobility is concerned. So there's enough room on charging infrastructure, battery swapping, fast charging, so many ideas of business that are just taking seed. So those are another set of businesses available for people who want to be in electric mobility. But people who want to be national, large players, big volumes, after-sales service network, 1,000 employees, 10,000 crore requirement, those obviously will have to be handled with a very different sense, which means the size matters here. The colossal size matters. As we have seen in case of any automotive operation in India, all the two-wheeler guys, three-wheeler, four-wheelers, they have reached a size which is mammoths, and that's what India needs. So consolidation is good because it would assure a completeness of anything to do with the electric mobility, right from supply chain to end of life of servicing. Not only just sell, make something, sell and forget it.
Gill says it is high time for traditional players to rethink their EV strategy because with 5% conversion from ICE to electric, the writing on the wall is very clear that if the incumbents don't stress on electric, they might lose big volumes. However, there is still time to go before electric fever completely catches up with Indian consumers. For instance, even though electric two-wheeler registrations have hit an all-time high for 2022 at 68,324 vehicles in the festival month of October, which is an increase of 29% over previous month, overall two-wheeler vehicles, which include both ICE and electric, have zoomed over 45% in the same month. Electric two-wheelers account for about 4% in total two-wheeler registrations between January-October. EV companies see 4 to 5% of overall two-wheeler registrations as inflection point, after which faster conversion from ICE to electric vehicles is expected. Analysts are in wait and watch mode to see if the rise of EVs in the last 2 months was driven purely by festival season sale. Experts say the latest October month percentage growth of EV two-wheelers over previous month is in line with every year growth of festive season sales, but the volumes indicate that it is too early to say that it is a beginning of a hockey stick growth. However, with inflection point of conversion at 4% touched months ago, they are cautiously optimistic. The electric two-wheeler sector is still recovering from a spate of fire incidents and is trying to earn the faith of customers. On their part, customers are also treading with caution and choosing brands which are already established. But it doesn't mean that small players don't have enough room to grow in the ecosystem if they realign their strategies.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.